Good morning everyone and welcome to Morning Markets here at True Potential. So we had a quieter day yesterday, largely thanks to the Memorial Day bank holiday in the US. So if we turn to Asian markets, overnight data points to a renewed recovery and an improvement in sentiment there. Activity measures from China for the month of May show a recovery in both manufacturing and services activity as the economy there reopens after the latest bout of COVID lockdowns. There is still room for the data to improve as we go into June, however, and that's because there was only an 8 percentage point drop in the number of firms reporting easing in logistics blockages as a result of the lockdowns through April and May. Now, consumer stocks and high-growth tech in China have led the rebound in equity indices over the last few days, and that largely reflects the improved optimism with regards to the easing of lockdowns, but also the fiscal measures that Chinese authorities have put in place to try and support demand and encourage activity as we go through the summer. Now, the other main talking point for today, and it's one we have talked about frequently this year, is inflation. So oil prices are now up over 15% through May and have now exceeded the levels we saw following the conflict breakout between Russia and Ukraine in March. And the overnight news of an EU compromise deal with regards to Russian oil imports also supports oil prices going forward, as does the reopening in China, given the heavy use of industrial commodities in their manufacturing and construction activities. So all of this is likely to feed into higher consumer prices in the month of June and beyond, because oil is such a key component of inflation baskets in energy prices, in transport of goods, in the creation and manufacturing of goods, and also in our consumption. And with inflation already at such high levels, it's likely to feed into further rhetoric from central banks with regards to the actions they need to take on interest rate policy in order to try and bring inflation down. And to give a measure of the challenge that central banks face, over the last 24 hours we've had inflation prints from both Germany and France, and both have come in higher than expected, and inflation in Germany is now close to 9%. And this takes us ahead to next week, where we can look to the ECB meeting for the month of June, where they are likely to signal an imminent increase in interest rates. And that will be the first increase in interest rates from the European Central Bank since 2011. And this is largely trying to bring inflation down and control inflation expectations. So colleagues next week will update you on that, but thank you for today. That's it.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.